This is Al Brooks, and I am recording a blog based on techniques that I described in my price action trading course. And today is Friday, October 26th, 2012. The Emini on the weekly chart has been channeling up for several years at this point, and it's had pretty good sell-offs along the way. And you can see that this sell-off back here last year was bigger than this one. And if we do get one up here, it could be bigger than that one as well. To me, we have a bull channel, and it's a broad bull channel. And channels usually transition into trading ranges. And the broader the channel gets and the flatter it gets, the more likely it is to transition into a trading range. So I think that we're probably transitioning into a trading range at this point. If you draw a trend line along the bottom of the channel using these points, create a parallel and drag it up to this point, you can see that we poked above the top of the channel here in early this year and then turned down, and we poked above it again much more strongly here, and we're turning down again. We had a high 2 buy, an ABC pattern, down, up, down, and that triggered a couple of weeks ago, and then it failed and we broke to the downside. We're right at the moving average. You can see that this is also a wedge. First push up here, second push here, third push here, and then this blue trend line along the bottom here creates the wedge. Wedge patterns usually 60% try to correct down to the bottom of the wedge, which would be this low. And whenever a channel breaks out of the top and reverses back into the channel, if it reverses back in fairly strongly, I think this is becoming fairly strongly. We need more follow through. If it does reverse back in strongly, it usually tests to the bottom of the channel. In other words, the bull trend line. And you can look at this and say, well, there are several possibilities. There's this line, and then there's this one going all the way back to 09, and then there's this red one. Since I created the channel based upon this red trend line, I think that's the ultimate target, and I think that's probably where the market is going to go sometime over the next year or so. Who knows? At the point at this minute, I'd say 60% chance. We still might get one more push up. I don't know, but I think that there's probably not much more upside left. Weekly chart still in a bull trend. Higher lows, right? Higher lows and higher highs. So it's still a bull trend on the weekly chart, but it's a channel and it's becoming flatter and the pullbacks are becoming deeper. So it's probably transitioning into a trading range. And other targets besides the trend lines, prior higher lows. Remember, as long as it's forming higher lows, it's in a bull trend. So the bears want the market to fall below prior higher lows, and then the market would be in either a trading range or in a bear trend. Here's the daily chart on the E-mini, and I've talked repeatedly about how unusual August was, an extremely tight trading range, and I thought the odds were 60 to 70% that we would get back here, and that's where we are now. And notice on the way up, we had an island bottom here. There's a gap before, a gap after. Another island bottom here, a gap before and after. Another island bottom here, a gap before and after. Here, almost a gap before and then after. Here, a gap and gap. And here, we have a gap before, we don't have a gap after. And the bulls are hoping that this is just a wedge bull flag, 3 pushes down, 1, 2, 3, or you can call it a parabolic wedge, becoming more parabolic in the fall. You can also call it a failed breakout below a double bottom. These are the things the bulls are looking at, and they're hoping for a gap up and another island bottom. But unlike all of these other island bottoms, here we have a lot of selling pressure, a lot of good, strong bear bars, especially this one. And this has been a broad bull channel for 50, 60, 70 bars. I don't know how many bars here, but it's a lot of bars. And when a broad bull channel goes on for 40, 50, 60 bars, it usually begins to transition into a trading range. And we have a small trading range here, but it could easily become a much bigger trading range. And again, prior higher lows are targets. So in the daily chart, first target, this tight trading range, we're there. Next target, maybe these higher lows. Apple, I've talked about Apple a lot. in the trading room because it's the world's most important stock. It tried to top out here. It was in a very tight bull channel. The trend channel line would be here, and it got a successful bull breakout of a bull channel and went up very strongly from above the top of this channel. However, if you draw a monthly trend line along the bottom of the move up and then attach it to the most recent prominent prior high, which would be over here. Look where it takes us. It takes us exactly to this high on the monthly chart. And here as well, we poked above it and we're reversing down. In my course on channels and channel reversals, I talk about this. And if the market reverses strongly down from a breakout attempt of a bull channel, a bull breakout of a bull channel, the target usually is the bottom of the channel. And since this is so climactic, we'll probably have a climactic reversal, which would be usually 10 bars, 2 legs. That's my minimum goal. 10 bars on a monthly chart is about a year. So I think Apple probably will do something like it did back here in 2007 and 2008. First get down to the moving average and then get down to the channel. So I think Apple is in um, the early stages of a trading range on the monthly chart and the early stages of a bear trend on the daily chart. Here's the daily chart of Apple, and here is a wedge, one push here, two pushes here, either one, doesn't matter, and then three. Okay, so we've got a trend channel line above, and then we have a wedge, a trend line below. And Apple has an island top, gap before, got gap after, and then strong selling on the way down. Now we have a negative gap here, and it turned out to be a measuring gap. This low, we had a pullback here that went slightly above it, so to me that's a negative gap. Here's a regular gap, positive gap. The market did not immediately go back above the bottom of the above the top of the gap. But here we tried to bottom here, and then we pulled back and tested it, but the pullback went above the low of the prior bar. So to me, that's a negative gap, and it still can be a measuring gap. You just take somewhere in the middle of this low and that high, and then project down. And the market did reach that measured move target, this red line, which was also right around 600, a magic number. Back here, I posted on my end of the day section of the Brooks price action chart that I thought Apple was probably topping out because of all the things I just said, and that it was probably going to hit 600 before it was going to hit 800. At this time on television, options action in particular, they were talking about Apple probably going to 800 and 850, which I thought was a mistake. They were looking at the daily chart and not looking at the monthly chart, and they missed that Apple was at the top of a channel. Apple, the most important stock in the world, it's rallied so strongly over the past several years based upon an incredible string of great technological advances. And I think the reason why the price earnings ratio is as low as it is because the market feels that the string of innovation cannot continue, and it's predicting that the price will fall relative to earnings. And that's consistent with my belief that Apple is way overdone on the monthly chart and is probably in the process of forming a big trading range. On the daily chart, we have three pushes down, so we have a small wedge, and we could come back up here and test the top of the wedge. My course, I talk about double top bear flags. The bears will try to create a double top here, and then they'll try to have the trend resume, break below this low and go down for a measured move, which will take the market here. The bulls would be happy to have the market go sideways a little here, dip a little, and form a head and shoulders bottom. So here's a left shoulder, here's the head, and if it gets up here and pulls back a little bit, the bulls will call this a head and shoulders bottom or a higher low major trend reversal, and they'll want the upside breakout and the measured move up, which would take us back up here. Even if we got here, then traders like me would start betting that we'll get a double top. Remember, I think on the monthly chart, we're entering a trading range. So to me, on the daily chart, I'm going to be looking to sell rallies. By selling rallies, I probably will look to buy put spreads. if the chart sets up. Since Apple is the most important stock in the world, um, if it's entering a trading range, it probably will limit whatever upside potential that the E-mini has. And that is all that I have to say for today. I think that we'll probably get some kind of a pullback on Apple over the next week or two. But if in fact the market does decide that we're in a real bear trend on the E-mini, we may just keep selling off relentlessly. Everyone's hoping for a pullback. Bears want the pullback so they can short. Bulls want the pullback so that they can get out with a smaller loss. And as I said, the market's in a bull trend on the weekly chart on the E-mini and a bear trend on the daily chart. And both there are institutions buying and institutions selling. And if each takes a trade like this 10 times, both will end up profitable. There are, whenever the market is not in a breakout phase, 90% of the time it's not in the breakout phase. There are institutions buying and selling, and everyone is pretty much evenly balanced. And that means you can make money buying at any instant. At any instant, you can make money buying, and you can make money selling. And I say that because there are institutions that are buying, and there are other institutions that are selling, and both are profitable. And they would not be taking those buys or those sells if mathematically they were going to lose money. So there are ways to make money buying or selling if you manage your trades correctly. To me, we're at the top of a channel on the daily chart on the E-mini, and I think we're probably transitioning into a trading range on the weekly chart. So I would rather buy low, sell high, and scalp. Scalping on a weekly chart, that does not mean going for 1 or 2 points. It means not swinging with the intention of a trend going on forever and ever. It's getting out at logical um, profit targets. Um, if I feel the probability is not particularly high, I go for a reward that's twice my risk. If I feel that the probability is pretty high, I usually exit with most of my position at 1 time my risk. Because if a trade is a high probability trade, it probably will not go very far because there won't be anybody else to take the other side of a trade. No one is going to take the other side of a trade where you have a high probability of making a big reward and with a small risk. All right, that's the end of what I have to say today. Thank you.